Google was the trade of the week for last week. Today's date is 8/19/2012. It's 12 o'clock a.m. and it's Sunday. So our trade of the week was Google, because Google for a long time did not have enough confidence by Wall Street. But now that the mobility acquisition is working correctly and it's going to possibly reduce their head count, employee count by 20%, the market really liked it. And they liked it enough to push it to multi-year highs. As we have always said, we had to sell short back here in January and here. We had 3 months down to this support level, and we've had 3 months up to all-time calendar highs. We're trading Google since Google's been a publicly traded company. One of the things I'm going to emphasize right here, right now, that in the short term, we're getting into an overbought area here. Once we break these highs, these are multi-year highs, and multi-year highs have a tendency of putting higher highs. So it's taken a lot of years. It was back in 2007 when we were getting net short up here, and it went down to, it was a great buy here. In 2009, you can see what it did. That was a highlighted year. Boy, we enjoyed that year with Google. And over here on this monthly level, so here's the count. I'm just going to blow this up, MMT. This is where Google was in the financial crisis when it hit. We have come up. We had took out major monthly resistance levels. This rally could keep going higher. The higher that it goes, though, we have to start looking at the other side of the market. We'll see how much more room we can get past this resistance level, and we'll be selling into rallies, and that's what we do in these big names. These are, Google's finally kicking, and it's finally gotten up here. It's taken a long, multi-years to get back here in the price level. So with their build-outs, their rollouts, even in a slower economy, Google has done the right thing. That's a great bull rally, and Google could continue to rally over the next couple of years and make higher highs over the next couple of years. Will Google ever split the stock? We'll find out. At some point, you think they would. So that way would bring more people in the stock, because it's very expensive for people. We use call options and put options to trade it, because that way we can participate with Google on a very low dollar capital risk. Where when you own the shares outright, yes, we do have big players that own the shares. However, average people need to use calls, and they need to use the put side. So when Google wants to correct, you get paid. And when Google wants to break out for 3 months, you get paid using the call side of the market, called the options. And options pay well. And we have lots of live trades at times. When it gets overbought, we short it. And we even post those so that you can see them. And, we'll be looking at various different strategies now that we're getting up here. We're going to see what happens if we can get up above the 690 area. And we're going to take a look at where the imbalances are between the call side, dollar-wise, and the put side. When calls get too inflated, they come down. And so does the put side. When they get too inflated, they come down. So there's more room to go in this bull rally for Google. However, there will be, at some point, an area that when you break another set of higher highs, it's going to get that much more overbought. Money flow, 284 million, up 4.27 on a Friday expiration, closing up toward multi-year highs at 677.25 was the intraday high. You were within pennies of that, and I will see everyone tomorrow morning in the room. We'll be taking a look at both sides of the calendar on the short side, and how much of the long side of this bull is left in the very short term in the dog days of August.